Welcome. In this video, we're going to talk about consolidations. All right, so first off, we're going to start with how to identify a consolidation. All right, so a consolidation is an area on a chart where price is stuck between two zones. Candles typically bounce off support and resistance levels in this type of market structure. So we're going to do a little example of how to basically identify a market structure where price is basically consolidating. So let's imagine we have a support level here and we have a resistance level here. Okay, so this is going to be the resistance. And at the bottom, we have a support level. All right. So in between these two zones, we have a range. This area from support to resistance, we have a range. So let's highlight this range over here. Perfect. So support and resistance, you have those rejection areas, right? And this yellow highlighted area is your zone, okay? So what's gonna happen in this area is basically price will bounce off from resistance to support and back from support to resistance, and again support, and then back to resistance, support, back to resistance, support, back to resistance. Okay, so price will typically be stuck between these two zones. Okay, so this area over here is a zone, and this area here is a zone as well. So we're gonna mark this up as our zone, and this is another zone. All right, perfect. So this is a typical example of a consolidation, okay, where price is basically stuck between the two zones, and it will normally stay there until we have a breakout. All right, so this is how basically you identify a consolidation on a chart. Now, it could be happening on any pair, okay? It could be happening on the pair you normally trade, right? It could be happening on any other pair, commodity, currency pair, stock pair, right? Now, why does it happen? We're going to talk about it in our next slide over here. So what causes a consolidation, right? Now, this is the main question. People know that consolidation happens. Traders see it all the time, right? But what truly causes a consolidation? That's the main question, right? So a consolidation is a market structure on a chart which is formed due to very low volume. Okay, when there's less liquidity, there's low volume on that certain pair you're trading on, and you see consolidation, it's mainly due to low volume, right? Now, there are several factors which come into play when you experience a low volume in the market. So first one, you can basically anticipate that price basically moved significantly in the previous session. That could be one of the reasons why price is consolidating currently. Okay. Second reason could be the price moved significantly the previous day. Okay. Let's say your daily candle basically moved a lot the previous day. So there's a higher probability that today's daily candle, the present daily candle, might not move a lot. Maybe that's why your lower time frames are consolidating, right? So let me just draw an example of a daily candle just to basically illustrate the example a little bit. So let's say you had resistance, right? You had a resistance, and let's say this is your daily time frame, and let's say a candle had a break and close above this resistance area. Okay, right on top, we had resistance, we had a break and close above that area once this candle closed, right? Now, the next candle could possibly go stronger, okay? Because we had a breakout, right? This area right over here is a breakout. So normally after a breakout, there's volume the next day, especially if you're trading a daily time frame. So let's mark this up. This is your daily time frame. All right. This is going to be the daily time frame, and we're going to just highlight it right over here. So let's say this is your daily time frame. We had a break and close above the resistance level on a daily time frame. And the next candle you can anticipate to go bullish as well with a lot of volume. So that certain day, there's going to be a lot of volume. Now, if the daily, let's say, has moved a lot, right? The next daily candle after that, you can anticipate to have slightly low volume than the previous one, right? That could possibly cause consolidation on the lower time frame as well. Okay, mostly on a lower time frame, because if you're, especially if you're trading on a daily time frame and your daily time frame is basically consolidating, has not a lot of volume, then your lower time frames will be consolidating, right? But just by looking at the daily candle, you're not going to be able to tell if we are in a consolidation or not. So you're going to have to basically drop down to time frames like 1 hour time frame, 30-minute time frame, and 15-minute time frame in your respective sessions to basically identify the consolidation in that area. Okay, so that would be an example of one of the key factors why price consolidates, right? When using a daily time frame example, right? And that will cover our second point over here. Okay, so let's move on to the third point. So a high impact news scheduled in the next few hours, right? That could be a example or a major reason why price is basically consolidating at the current moment, right? So high impact news are basically under red folders, okay? So red folder newses are high impact newses. You have medium impact newses, right? And then you have the little to no impact, also known as the low impact news, right? So red folder news is under forexfactory.com. You can anticipate to check if the news is going to be a high impact or low impact, right? So the red will be your high impact news. Okay. Orange will be your medium impact news. Okay. And the yellow one will be low to no impact, right? So if you are waiting for a scheduled news, especially if it's a high impact news, there's a higher probability that price will typically range a half hour to 1 hour before the news possibly comes out. Okay, so that could be one of the reasons why consolidation is happening, right? Next point, a bank holiday. So let's say, for example, let's say you trade GBP USD. Okay, let me grab a bigger font. Okay, so let's say you trade GBP USD. Once more, GBP USD. Okay, perfect. So if you trade GBP USD, and let's say you trade the New York session, right? And next thing you see, maybe there's a holiday for the US bank, right? So you go under your Forex Factory and it says USD bank holiday, right? If you see that on your Forex Factory calendar, the news events where you can news events where the news are listed for that session. So if you're, especially if you're trading the New York session and you have a USD folder saying we have bank holiday, there's a higher probability that on that typical day there won't be any volume. Okay, now, at certain times, there is volume on bank holidays as well, but I highly recommend that stay away from bank holidays, okay? Especially if you trade a pair where one side of the pair is closed due to a bank holiday, okay? So let's say if there's a bank holiday in the United States, so the Wall Street won't open, the New York Stock Exchange won't open for that certain day, right? There could be volume in the pre-NY or NY open session, but there's a higher probability that you won't get the usual opportunities which you are used to seeing every single day. Okay, so stay away from bank holidays. And this is one of the reasons why consolidations also happen. All right. And last but not least, number 5, higher time frame candle or candles are at an area where price has previously rejected. Okay, this is one of the reasons why price basically consolidates on a lower time frame as well. Okay, causing a consolidation of price to form on lower time frames. So now this is a slightly advanced topic, but I will try to make it perfect sense by doing a little example over here. So let's say we have a support level. Okay, this support level was formed let's say, for example, on a daily time frame. Okay, daily was trending bearish. Okay, daily was trending bearish. We came down to the support level here, right? Price started rejecting in this area. Okay, and then next thing you see, daily finally formed a support level. Once we had a support level formed, price started trending bullish, right? Until it rejected on top, formed a freshly formed resistance. Once you see a candle closing bearish, okay? Once a candle closes bearish, there's a high probability the next one will go as well because you're rejecting on a daily time frame, right? Now, if the daily time frame is approaching an area once again where previously price has rejected, there's a higher probability that we will start rejecting in that area. Okay, so once that rejection starts to happen, okay, once that rejection starts to happen, you start seeing rejections on a higher time frame. There's a very high probability that this certain area over here, your lower time frames are basically consolidating in this area. Okay, either to break below the support level or basically start rejecting in this area once again, and you know we start pulling back up. So this is one of the reasons why you could experience consolidation on lower time frames, just because the higher time frames are at an area where price has previously rejected. Okay, so this is one of the reasons as well. All right, so this will cover what causes a consolidation. Now moving on to the next topic over here. Next topic, we will talk about how to approach a consolidation. All right, we talked about what causes a consolidation, right? Now we're going to talk about how to approach it. If once you identify a consolidation, right, now you're going to learn how to approach it. So let's start with the first point over here. A consolidation is formed due to low volume, low liquidity in the market. So a trader must stay away from taking a trade in a consolidation. This is very important, okay? Consolidations, this is not where the money is made. This is where the money is lost. So it is really important for a trader to identify a consolidation and must stay away from taking a trade inside a consolidation. Now, we're talking about approaching a consolidation. So what steps that needs to be taken when, trying to take a trade in a consolidation or after a consolidation? So that will, second point will explain our approach method to a consolidation. So a trader must wait for price to break out of the consolidation first. This is the first step, okay? Wait for price to break out, okay? This is the first step you're going to take, and then look for confirmations to support the breakout. All right, so we're going to do example here just to go over this step by step. So let's say we have a support level and we have a resistance level. Okay, and in between these two zones, we have a range. We have a range here where price is consolidating in. Okay, so let's say we have a break to the upside. Okay, once you have a break to the upside, once price finally starts breaking above, what you need to do is basically wait for this candle to basically close above the consolidation. Let me just draw this as a bullish candle because we're trying to illustrate an example of a bullish candle. So let's say this is our candle that is trying to break above. So what you need to do is you need to wait for this candle to close above this area. Okay. Now we're just doing an example over here of a bullish breakout, right? Now price can basically break below that too, depending on the trend. But let's just say price was initially trending bullish, okay? Price was initially trending bullish from the bottom, right? And then we entered into this consolidation area. We entered into this consolidation area due to any of the factors which is causing this consolidation to happen, all right? And then finally, after a few minutes or few hours, you have a break and close above the consolidation, okay? Don't just trying to take trades when price is trying to break above, because there's a higher probability that it might not close above it. Okay, because we can see that price tried to break above here, tried to break above here, tried to break above here, but failed several times to break above. So what is the probability that this will break out, right? So we don't know that yet, but there's certain factors that you can take into play, like what time of the sessions you are in, right? If you're at a time where there's a lot of volume, then there's a probability that we will definitely get a breakout. Okay, especially times like NY open session, the New York Stock Exchange open session, or maybe a London session if you're trading in London session, right? So every time there's going to be a lot of volume, you will get the breakout. Okay, once you get a breakout, right, you need to look for confirmations. When you get a confirmation, perfect. So you gotta look at it as, okay, what you need to see is that if you can get any further confirmations to take this trade. Okay, so if this is like a clean break and close above, right? And then you see like on the left-hand side, there's clean candles going down, right? Checking the traffic on the left, you're seeing the clean candles coming down. There is a higher probability that the next candle after the break and close, we're going to continue going bullish. Why? Because we have a clean candle to the left-hand side, also clean traffic on the left-hand side. Okay. So normally this is how you would basically approach a consolidation. But let's go back to our second point here. So a trader must wait for price to break out of the consolidation first, then look for confirmations to support the breakout. Otherwise, a trader is more prone to taking a loss if one does not wait for price to break out of the consolidation. Okay, just like we talked about. Just like we talked about in the example. We have resistance, price is trying to break above this resistance, right? But let's say this candle has not closed yet, right? Especially on a time frame like 15-minute time frame, 30-minute time frame, you need for price to basically break and close above, right? Because there's a higher probability that this candle could also turn out to be a rejection candle as well, instead of a breakout candle, right? Candle can basically stay below it and just leave a massive wick on the top, right? So this will be a rejection. It won't turn into a breakout. So that's why it is really important for candles to wait for candles to basically break and close at the same time, right? If you don't wait for the candles to break and close, there's a high probability that if the candle rejects again, right, and the next one can go bearish, right, and then come back up again. But you're going to be in a massive drawdown if you start holding your trades if you don't have a breakout. So a trader is more prone to taking a loss if you don't wait for a breakout off the consolidation. Let's move on to our second last point over here. A solid breakout above or below the zone of a consolidation will confirm the breakout. Okay. Once you wait for a candle to close and you finally get that break and close above or below, depending on the trend. So let's say you have a bullish trend, okay, whereas price is making higher highs and higher lows until we enter in some sort of a consolidation due to low volume, right? This is the area where price start consolidating, okay, in this zone over here. Price start consolidating in this area, okay, until you had that break and close, okay. Once you have a break and close above the consolidation, which will be above your resistance level, then there's a higher probability that the next candle will continue going bullish. Why? Because you have a confirmation, and confirmation is right over here. Okay, this is your confirmation, and I'm going to label this as a confirmation. I highly recommend to take notes at the same time as well. Draw some pictures to draw some support and resistance levels, or draw some zones to basically illustrate this example over here. Because consolidations, you're going to encounter that. If you're trading 5 days in a week, Monday to Friday, there's a high probability that you're gonna either encounter consolidation either once or twice in a week. So it is really important to understand consolidations, how to approach them, how to identify a consolidation, and also it is important to know why consolidations happen. But once again, a solid breakout above or below the zone of a consolidation will confirm the breakout. And depending on the trend, you will either get a break to the upside or downside, right? If the price was previously trending bullish, there's a very high probability that we can go bullish as well. If price was, let's say, trending bearish, then there's a high probability that you will possibly get a break to the downside or a continuation of a trend. All right, so let's move on to our next slide over here. In this one, we were talking about taking a trade after the breakout. All right, so now we talked about a few things. Let's do a bit of a recap, okay? So first, we talked about how to identify a consolidation, okay? Then we talked about how to approach a consolidation. Actually, we talked about what causes a consolidation. Okay, we talked about a few things here. So we covered a few things here. Okay, we talked about how to identify a consolidation, right? What causes the consolidation, and then we talked about how to approach it. And the last step of consolidation topic, we will talk about taking a trade after the breakout. So without further ado, let's get started with our first point over here. Once a solid breakout of the consolidation takes place, always look for confirmations to support the breakout. All right, always look for confirmations, right? Wait for the candles to close. All right, check the candle traffic on the left. This is very important. Okay, you may or may not get the break above or below the consolidation, but the next step right after the breakout is basically seeing what type of traffic you have on the left. Okay, if you have clean traffic on the left hand side, right? Let's say you have clean bearish candles on the left hand side, like this. When you looked on the left hand side, there's a higher probability that once you get a break above, then candles will basically do the same thing. They will mirror the traffic on the left hand side. If you were clean going down like this, then there's a higher probability we will have a clean move going up. Okay, just remember this. This is really important. Price always duplicates whatever happened on the left. Let's say if we had a consolidation on the left-hand side, there's a higher probability that we will consolidate again. So, always check the traffic on the left-hand side. And our next point over here, longer the consolidation, the bigger the breakout. Now, this is a slightly advanced topic, but at the same time, I really want you to understand this. It's pretty simple. It's more of a psychological thing. So let's say you have a support level and you have a resistance level. All right. In between these two zones, we have a range. Okay. Price ranged in this area, or let's say, for example, 3 hours. Okay. 3 hours in consolidation. So price was consolidating for 3 hours. So now this is a solid consolidation. Anything over 2 hours of consolidation is considered a pretty big consolidation. So if you have 3 hours of consolidation, right, there's a very high probability that since price is stuck in between these two zones, support and resistance level, it will finally build that momentum to basically start breaking. Okay, so let's say we have a break to the downside. Once we get a break and close below this area, there's a very high probability that price will trend with a lot of volume, with a lot of volatility, and basically create momentum in the market. All right, so the longer the price consolidates, the bigger the breakout. And once again, please be taking notes on this, because this will basically help you on your day-to-day trading. So longer the consolidation, the bigger the breakout, and momentum in the market starts to pick up simultaneously. All right. So one of the reasons price breaks out of the consolidation is because you're moving into a time where there's a lot of volume. And second of all, once you get the breakout, you will start to see momentum coming in. Okay. You will start seeing big candles going up or big candles going down, depending on where the breakout is. So this will basically cover the topic of consolidations. And once again, we have talked about identification of a consolidation, what causes a consolidation, how to approach it, and basically how to trade it.